This episode of Mining Stock Education is brought to you by Blue Sky Uranium Corporation. Blue Sky Uranium has first mover advantage in Argentina in the world's newest uranium and vanadium district. With an existing near-surface deposit that is open for expansion, Blue Sky Uranium also controls a massive district-scale land package with mineralization along a 145-kilometer-long trend. Blue Sky Uranium possesses tremendous exploration upside and is an excellent leverage play on rising uranium and vanadium prices. The company is run by a best-in-class management and technical team with proven exploration and development success in Argentina. Blue Sky Uranium trades under the ticker BSK on the Toronto Venture Exchange and as BKUCF on the OTC. For more information and to stay on top of the latest news, go to blueskyuranium.com. That's blueskyuranium.com. Hello, I'm Bill Powers with Mining Stock Education, and I'm here at PDAC 2019 with some of my friends. I'm joined by Nick, the mining book guy. Nick, thanks for coming on.
Thanks for having me, Bill. It's great to be here.
David Erfle, the junior miner junkie.
Thanks, Bill. Always great to talk to you.
Likewise. And Brian Leni from the Junior Stock Review.
Thank you for having me.
Well, gentlemen, I like to do these roundtables when we meet together at these conferences. I'd like to get your initial thoughts on PDAC. What are you picking up on? How is it different from last year? What can you share with the listeners, the average retail listener that is going to be listening to us? Brian, let's start with you.
Sure. It was interesting this year. I'm not sure if it was the $25 that they're charging at the door, but Sunday was pretty quiet. Monday was much better, but I saw a lot of suits on the floor, and which leads me to believe that the retail crowd isn't here yet, and it may be concerning for some people. But yeah, that's my overall thought on it.
And David, you mentioned to me yesterday in a conversation that it seems like attendance is down versus last year.
Right. Yeah. The Metals Investor Forum overlapped on Sunday. I think that decreased the traffic here. But like Brian said, the $25 at the door. I've talked to a few people at the brews there, and they like it because it eliminates all the riffraff just looking for free stuff. So you get more serious investors here. So I think they're liking it. But yeah, it's been a little less crowded, but I like it that way.
Mm-hmm. And you mentioned to me yesterday that it kind of feels like a bear market.
It does. It kind of feels like it's kind of a tale of two markets right now. You know, it is a bull market in companies that are that have high margin projects, in companies that are making money at $12.50 gold. And it's a bear market though if you have a really good project and you need money. If you need money, it's a bear market and you really feel it because money is really tight right now. Yeah,
there's juniors I've talked to where they do an offering and they're about halfway to the goal of what they wanted to raise, and then they're extending the offering. There's some of the companies that are oversubscribed, but then there are some of these that are really, really struggling, and I'm kind of looking at them and I can see kind of the anxiety on their face, like, am I going to have a paycheck in 9 months? Nick, your thoughts?
Yeah, so I do agree with Brian and David about the retail crowd and the reasons they gave, but it's interesting because the very first thing I went to at PDAC was the Western Tethyan session on the north side of the convention center, and I went to that last year and it was rocking. I couldn't believe that it was standing room only, with 30 or 40 people in the crowd. And when I think back, maybe there were very few young people or actual investors like myself, but there was an energy there that I didn't expect. I think they're even going to expand that to a full day session next year rather than just a half day. And then just as a side note, I wasn't at Peru Day. I've never seen a mania like that. There were Peruvian people coming out of there looking like soccer fans, like they had the scarves and everything, like it felt like they were coming out of a stadium. Like I've never seen a crowd like that in an area at PDAC. So there's still something going on the countryside, but it's interesting that contrast with what we see in the investor exchange.
Mm-hmm. Talk more about jurisdictions. What are you seeing with jurisdictions?
So that's my favorite thing about PDAC is that it's the one place where people from all over the world come, a lot of government officials, and I'll even mention, along with the Western Tethyan, which is Eastern Europe, I went to Mongolia Day, I went to Greenland Day, and I went to the Africa Mining Breakfast, and they were all so interesting, and you can really get a good idea of which countries have it together and which ones don't. There were actually a few countries I wanted to attend and they canceled at the last minute because clearly they didn't have it together. But just as a quick note there, I was really impressed with Greenland. Actually, it was kind of cool that the Crown Prince of Denmark actually did the opening talk there. He even said that his wedding ring came from one of the Greenland gold mines in the south of the country. And it wasn't all that crowded, but that's an emerging jurisdiction that's definitely moved up on my radar because that country has it together. All their information is free, like all the database online, and they keep saying every year we're going to make it better. So I could say so much about all the other jurisdictions, but that was really valuable to go to those events.
So Greenland sticks out the most?
Yeah. As a surprise, yes.
Okay.
Yes.
And David, what about you?
I really like Peru, the Puno region of Peru. Miramont Resources, who trades on the CSE, is about to have some results coming out in a few weeks. And if they're really good, I think it might heat up that region. I know Fresnillo's been staking a lot of ground there, and it really looks good to me.
Brian?
I did my presentation at the letter writer on Sunday about jurisdictional risk, and the country I actually used to explain how I judge risk was Ecuador. It's a very risky jurisdiction. It's been in the headlines for all the wrong reasons for a number of years, but I really think that they've hit rock bottom and things are beginning to change. So that's one place I've looked to deploy some money, but there's only one company in particular or two companies in particular I'm looking at, Adventus and Salazar, who have this relationship that I think is sort of X factor for a Canadian company in Ecuador. Where they're using Salazar, who's led by Freddie Salazar, and they've got community ties. Freddie's Ecuadorian. So it's a special situation in that case. And I do believe, at least for a limited amount of time, it's open for investment, but we'll see.
From a risk-reward perspective, where are you finding the greatest value right now in different types of mining companies?
In my opinion, that's one of the places. Modern exploration, because of all the troubles, the cost of capital, access in a number of the regions, there's some contentious issues with INV metals right now, which we need to pay attention to. There's going to be a vote on mining in general in that area of Ecuador. But it's really important. Many people, I think, look at politics from a federal level or at the top. But Ecuador's a great example of how you have to look down to the municipal. And in my talk, I actually used Canada as an example of jurisdictional risk. Alberta came out a couple years ago, or in the last year, with new regulations on coal being used in power generation. One of the companies that's been a cornerstone for me, Altius Minerals, was greatly affected by this because they invested in the Jinsey coal mine, specifically a royalty on that mine. With the new regulations limiting coal's use into the future, they're potentially going to lose around $190 million in missed earnings due to this change in policy. And I bring that up only to say that you have to look down lower, but even a jurisdiction that's ranked in the top can be a risk to your cash. So,
David, you're not as big on prospect generators or royalty companies, but having said, it kind of feels like a bear market. Will you consider some of those companies for this year?
Yeah, it's funny you say that. There are a few royalty companies that I like, but they're kind of slow and boring. They do make you money, but they're kind of slow and boring. I like the more risky plays that can get you a little more money a little quicker. But I do have three subsectors that I'm really interested in right now that I promote to my subscribers and to my readers. It's growth-oriented producers with a sub 500 million market cap, and developer explorers that have a high margin project in a really good jurisdiction. And I really like good jurisdictions in Canada right now because you have the Canadian gold price is almost $1,800 an ounce, and the Canadian dollar keeps going down. So they're paying their workers in a depreciating currency and selling their gold at a really high gold price. So if you see things like Marathon Gold and their deposit in Newfoundland, that they just got a royalty, an NSR royalty check from Franco-Nevada, where they sold a 2% NSR for $18 million as opposed to diluting. So they've got almost $22 million in the bank now, and they've only got like 170 million fully diluted shares out, and they've got 4 million pretty high grade ounces in Newfoundland. So and also like early stage companies, with a management team that has a proven track record that they've gone from discovery to selling the company before, and if they got a tight share structure and they do have money, that's a big one. You want to make sure that these early stage companies are cashed up right now, because if they're going cap in hand right now, it's not a good situation. They're not going to get very good terms on their money.
We'll be right back after this word from our sponsor. Orin Resources is a junior exploration company with the appetite of a major, focused on finding the next globally significant discovery to create enormous potential upside for shareholders. It's one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. With Orin's unparalleled technical team and highly experienced management with a history of success in advancing and monetizing exploration assets, Orin has been called one of the best in the junior exploration sector. Orin trades on the TSX and NYSE under the ticker AUG. To learn more, go to aurinresources.com. That's AURYN resources.com.
Let's talk share structure. I met with a CEO 2 days ago. Company's been in existence. It's an exploration company. They took it from no resource to 1.5 million ounces. He only had 140 million shares out, and I asked him, I said, did you do a rollback? He's like, no. I said, well, you've been a good steward to, over a decade to only have that many shares out, especially to develop a 1.5 million ounce resource. Last year, Nick and David, we spoke about, I believe, when we did this PDA Roundtable, share structure. Nick, you mentioned that the Australian explorers tend to have 1 billion shares out. Yeah. And David, you mentioned that you'll consider a more bloated share structure if you like the management.
And if there's a tight retail float.
Tight retail float. That's another one of the qualifiers.
Yeah.
So my question is, I spoke to a CEO recently after a financing, he's going to have 500 million shares out on about a $15 to $20 million market cap exploration company. Mm-hmm. And he said, listen, I'm not doing a rollback. My thing is I'm going to focus on creating value, and that's how I'm going to protect against dilution. It's not the number of shares, it's creating value. Mm-hmm. Do you guys agree with that perspective?
Well, then if he's going to tell you something like that, the first thing you should ask him is who owns the stock. Is how much is in strong hands. If it's got a 60% retail float and higher, mm-hmm. then you're not going to get very much out of that company. There's
30 or less,
not a lot of
30%
upside.
or less.
I would 35% or less in a company that's got 500 million shares out or more and really strong. I can give you a good example. Barkerville Gold Mines. Mm-hmm. They've got
developer.
A developer in BC. A very famous gold camp. They've got 500 million shares out around there, mm-hmm. but a Cisco, both the Cisco companies own nearly half of that company, and the retail float is only 35%, mm-hmm. and they've got 50 million bucks. Mm-hmm. So that I make an exception on a story like that if it's got a big share structure.
Mm-hmm. I'll give my first company example here, Roscan Gold, which is ROS on the TSXV.
They had a discovery hole recently,
yes,
right?
And so it's interesting because I fully respect Greg Eisner, who runs it, his exploration ability, but I've been disappointed at the way they're raising money. They raised with full warrants before the discovery, which I think was more reasonable because they were struggling, but since the discovery, they just had another raise at a bit of a discount, also with full warrants. And I was wondering, why did they do that? And I don't think he was doing it because he was necessarily trying to do something for insiders, but I think he gave perhaps too much power to the brokers he was working with. But with that said, even with the share structure issue, even with all these warrants out, this has been a 3 or 4 bagger in a month. And the key is that it was such a small market cap and it's such an interesting discovery. And that's kind of a bit of the counterexample. Even though it's a clear weakness, and I think it's going to have over 100 million shares out with a bunch of warrants, even with those issues, it still has shot up, and it wouldn't surprise me if big money forces their way in. I don't love that situation, but I'm more than happy to still get a 2 or 3 bagger. By the way, that was my very first double in 24 hours. The only problem with that is I was trying to buy more shares and it just kind of kept moving up. But yeah, that's one to keep an eye on. That fits what I like to do: small, gold discovery, and Mali.
Mm-hmm. And how did so you wanted to buy more on the way up? You didn't take half off the table when it doubled.
Good question. I wanted to buy more on the way up, and as I was calling, well, long story short, I still trade through my full service broker, and I was on the phone checking the market depth. And as I was trying to put the order in, I see the market depth, like the little green and red bar is moving up. And so I had a small position, and then I was like, oh, it doubled so quickly, it's great. I'm going to take half off the table. But within the next week or two, it calmed down a bit, and I learned more, and that's when I quietly built up more shares. Now, so sometimes your mind kind of goes back and forth, but even though I took half off the table, I now own way more than I initially did at a higher price, thinking that this could be another double or triple.
Mm-hmm. Yeah. Any thoughts on share structure, Brian?
Yes, I think the question always, it depends. But the side note to that is, once you get up to that, like 500 million shares, the question I would have is, where were the failures before? Like, are they broken promises? Are you completely wrong about how you were looking at a particular project? I would be really wary of giving too much confidence in certain situations, and I'd want to look back at the prior history of the company and see why they weren't able to put it together. Like Barkerville's a great example, but they're headed right to production. Like if it's an exploration company and they're at 500 million shares, to me that's probably a lot of failures along the way.
Yeah.
And there might be a justifiable answer, but you need to understand why. So.
Yeah, with early stage companies, if there's a lot of shares out already, that's a big red flag. Because by the time they get down to where they got a resource, then they got a PEA. How many shares are going to be out then? It's you got to start off really tight.
And David, you have many more years than me on this, but when that discovery hole comes out, I've seen share prices, like you mentioned, double on these $15 million market caps. They double in a day, and then the company needs money. Okay, maybe they got $500,000. It'll float them 6 more months. But then a company I was involved with, they didn't raise. I'm like, why didn't you raise at 10 cents, then 5 cents? And then 3 months later, it's at 6 cents. And then they do the offering at 5 cents again, pre-discovery hole. And I'm like, what is going on here? This is like business 101. Do you know what you're doing? You guys have any thoughts on that?
Yeah, a good example of that, and it's a high-profile company that everybody knows. It's Tinker Resources. They have a really good project, and then they had Brent Cook get into it and recommend it. And of course, when he recommends something, he's the highest respected newsletter out there, and they got a really good pop in their stock. And I remember it was at Beaver Creek, and I go, why don't you raise money? This is a perfect time to raise money. And they didn't do it. They said they had enough, and sure enough, the share price shot back down all the way to about 30%, where they were forced to raise because they ran out of money, and they had to do it with a warrant. And now the share structure is completely blown out.
Yeah, I mean, it seems like in CEO Training 101, they should teach these pre-revenue execs this, because there was a developer CEO of a really respectable project that I spoke to last year, and when I interviewed him, I was asking him about his last 6 months of share price history and why did you see such a spike. He's like, well, Bill, it was an unpaid newsletter solicitation. He drove up the volume of our shares 10 times the average volumes. We tripled in 3 weeks, and then I did a financing at the top, and then the share price came down. And isn't that the way to do it for your shareholders?
Yes, that's what you do.
Right.
Yeah.
Yeah.
I should mention real quick, even though I was a little negative on what Roscan did, I still have to admit, I believe the raise last year, pre-discovery was 6 cents. And this raise was at 14 cents. Even though it was with full warrants, when I talked to Greg, it's like he doesn't know what the next results will be. So I give him credit for still taking the money, and we hopefully won't have that situation where the next one's back down at 6 cents. Yeah.
Another near-term producer CEO I spoke to, very impressive, did a multi-million-dollar raise, just completed, no warrant. The company has a lot of warrants that are going to expire this summer, and he told me, Bill, I don't want my share price to go up. Not until the fall. I want all those warrants to expire out of the money. I got enough cash.
I know who you're talking about, too.
Yeah, don't mention the company. And I'm like, you know what? I like this guy. Yeah. Any interesting people you guys have met while you've been here?
Any new people interesting?
That would be pertinent to our listeners.
Well, people that like, you want me to name drop?
Sure.
Is that what you want?
Yeah.
Not really. You know, I'm so busy catching up with all the companies that I'm invested in for my subscribers. You know, there's most of them are here. So running around, networking and speaking with them, and I haven't really met any big names that I didn't already know. But it's, you know, I'm focused here on getting the job done, and then by the time the day's over, it's really tough for me to network at the end of the day. You know, it's really tough. You know, the older I get, I see myself going back to the room a little sooner and sooner at each PDAC, because my back is killing me, my feet are killing me, and there's no place to sit at these receptions. So I find myself in bed by like 8 or 9 o'clock. You know, it's really tough for me to do.
Oh yeah, I've got some name drops. I mean, it was so cool. I mean, I was walking to get my badge, and from the north side of the convention center, and I see this big guy like asking, you know, where do you go to get a badge? And lo and behold, it's Warren Irwin. I never talked to him before, and I said, hey Warren, I can show you where to go. And so it gave us a reason to chat for 5 or 10 minutes. I immediately told him that my favorite interview last year was with Bill on Mining Stock Education, and we had a nice little chat, kind of like this chat about jurisdictions right here. So that was great. And then Norman LaMarche, who is one of the, if not the largest resource fund manager in the 90s, I still running a large fund. There was a reception where he was one of kind of the guest stars, and for whatever reason, Brandon McDonald from Fireweed Zinc and I were kind of the only people talking to him back in the corner. I think he's one of those guys who's really smart, but he doesn't really want to mingle too much. But that was neat. It's like you can take advantage of these situations, and you know, 2 major fund managers got to pick their brain, and that really made my PDAC.
Yeah. Anybody with you, Brian?
It was more reacquainting relationships that I haven't seen, or people I haven't seen in a while. So, but nobody like you guys have met.
A gentleman that I talked to for an hour, or I should say he talked to me for 55 minutes and I talked for 5 minutes. He was telling me about this company that he's involved with. He's one of the key shareholders, and he's going on and on about how great the prospects, the drill results, and why I need to get involved in this company. That was over the weekend, and then the next day I looked at the share price. The share price actually dropped, I don't know, maybe 8%, and that could deal with the price of the commodity that they're mining, or I should say searching for. But my question, I'll throw it out to you, David, to start with. When you're at these conferences and some guy says, hey, look at this, nobody knows about it, it's coming out, you know, you got to get in now. Would you take it with a grain of salt? Or
consider the source. Okay. Basically, you know, that happens to me a lot. I have a few really high net worth investors that are very colorful characters, and you know, sometimes they're right on with what they're telling me, and sometimes they're not. But what I'll do is I'll check them out. I'll check out the company because I really respect their opinion, and then I'll make my own, you know, decision from that. But yeah, it's funny. It happens. It happens a lot.
Brian, I'm sure it has happened to you as well.
Yeah, it depends on the source.
So it's all about the source.
Yeah, absolutely.
And then you research the source.
Yeah.
And then you look at the fundamentals and what's been publicly disclosed about the company. Yeah.
Absolutely.
Yeah. Any other thoughts for you, Nick?
You know, I really like to be the first person to know a story, and or at least feel that way. So that's already, it's kind of weird. It's a little bit of a negative if someone tells me about it before, you know, I figure it out. But
you do the online chat too.
Yes.
So you're going to hear that chatter in the online chat rooms, right?
Usually, but it happens more often than I expect that I'll see news in online, you know, CEO.ca type stuff, and no one will comment on it. So that is the signal to me. It's like, oh, I'm the only one paying attention, or the only one chatting about it. And so that's why I don't pick too many stocks. But that's the strongest signal. But on the other hand, it's very rare for me to want to buy or want to research something that someone tells me about right away. But I do like keeping it on the radar. And if I wait a year or two and it gets interesting, then it kind of recycles, and I feel like, oh, you know, I picked this now even because I was waiting for it so long until it got cheaper. So I think about that a little differently, I think, from other people, but maybe that's insightful for the listeners.
In this sector, some have likened it to gambling. We really got to watch our emotions, because after an hour with this guy, I'm saying, oh, I got to go buy it. I'm like, just wait a second here. I don't even know who he is. Let me just watch the share price for at least a couple weeks, go through the presentation, and I'll see where I go, from there. Has anybody been convicted of insider trading recently in Canada? I mean, does that even happen?
Oh, I'm sure it happens.
Yeah, I'm sure it happens, yeah.
Oh, yeah.
It does?
Oh, yeah, 100%.
Okay.
I don't know of any cases, but
That's my point.
I'm very skeptical of things. So, I don't know of anything, but I'd be really surprised if it wasn't happening.
I won't name the company, but I know there are concrete cases where CEOs sell their shares and they don't report to SETI until 6 months later. And I can't believe they don't go to jail, or they just get a small arm slap. But like selling hundreds of thousands, if not millions of dollars of shares, and I can't believe, get away with it.
I was just reading about that, so that does happen.
That does happen.
And
yes.
And I know of a few, but I'm not going to name any names. I don't want to get in trouble, but I know of a few that should.
It's kind of like Goldman Sachs and these big guys. They break the rules, and then they know the fine is going to be 5% of the profit.
Cost of doing business.
The cost of doing business.
Yeah. Yep. Well, look at some of the share prices that move before news, like major volume. Like somebody knows something.
Yeah.
And it moves either direction too. A lot of times it goes down.
Yeah.
Yep.
Yeah, and could some of that could you just say, hey, it was the guys on the drill rig, they were telling all their cousins.
It can be anything, and that's the thing, is like how do you prove it? But it does seem fishy when you have major moves preceding major news.
It happens all the time. Yeah.
David, a question for you: if someone knows there's going to be a major marketing push on a stock, and they buy the stock pre the marketing push, is that legal? Like, from a technical sense, it may not be ethical, but is it legal?
Yes, it's legal.
Legal, yeah.
Completely legal, yep.
Yeah.
Smart.
Yeah.
Smart. Okay.
It's smart trading.
Okay.
Or, even better is you just get the free options to begin with. You don't have to buy it, and then you don't even have the risk it just expires if it doesn't work out. I mean, this happens all the time.
A good thing to do is take a look at volume on a lot of these companies that are really being shellacked. And especially if it's a former high-profile company that was doing really well in the past, and you see a lot of volume, and then you go in a Canadian Insider and you see a lot of insider buying, that's a sure sign to just buy something for a quick trade, because something's going to happen. It happened to Mandalay Resources the other day. I noticed they were in the top 5 of insider buying for like a week or so. And then one day they had like a record volume spike in its trading history. I'm like, this thing's gonna pop, and I didn't buy it. But it went up 30% the next day. So when you see things like that, that's a really good sign that you could have a quick win.
I had Ted Dixon on the podcast recently in the last 2 months, and he was saying, it's only been in, I can't remember, the last 10 years where you've even had Canadian Insider, because SETI is not even that easy to operate. It is not user-friendly. And so these sources like Canadian Insider, they're very, very useful tools.
Oh, very useful. The first website I look at when I get up in the morning is Canadian Insider. Yeah.
And with that too, one thing that Ted said that stuck out to me is, like, if the CEO is buying, that's good, but you really know it's onto something if the CFO is buying. Because he's usually the most conservative person in the company and the most pessimistic guy.
That's right. And on the other hand, watch out when the CFO resigns. I would get worried, especially when that comes out late on a Friday afternoon.
Okay. After the market closes. Yeah. Good points. Yeah. Well, gentlemen, it's been an interesting discussion. I know our listeners have benefited from it, so thank you for joining me, and I look forward to chatting with you at the next conference.
Thank you, Bill.
Thanks, Bill.
For millennia, ancient pharaohs prospered from unparalleled riches made possible by Egypt's resource-rich gold deposits. But despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world, but that's all about to change. Aton Resources is leading the charge on the Egyptian mining revival. As the only public exploration company in Egypt, Aton Resources has first-mover advantage. Focused on their 100% owned Abu Marawat concession, Aton Resources is advancing several exploration exploration targets, including the recent discovery of the legendary Lost Mountain of Gold at Rod Ruin. Learn more about this exciting drill program and other news at atonresources.com. Aton trades on the TSXV under the ticker symbol AAN and on the OTC under the ticker ANLBF. Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.